to something different. We're going to talk business now. Oil, in fact, falling price of oil, making headlines again. The big question, how low can oil go?
That is the key question now for oil. Let's take a look at what Brent Crude is trading today. This is the global benchmark price for how much a barrel of oil costs. And at the moment, it's trading at around $45 a barrel. Now, that's a huge fall from the peak we saw in June of last year, where it was at $115 a barrel. And you can see, again, a massive slide in trading today, down almost 4%. So a really big change in the price of oil over a relatively short period of time. Now, part of that is down to a new report that came out from Goldman Sachs on Monday with their forecast for what should happen to oil prices over the next year. They say that they'll fall even further to around $43 a barrel in the next 3 months. They don't see any recovery in it until indeed this time next year, which is much longer than many people had anticipated and has led to this latest round of sell-offs.
So what's behind this tumble then?
Well, the basic principle is that the world is producing more oil and consuming less. So that means that prices come down because there's a glut in supply. Now, the OPEC group of oil-producing nations have for a long time been considered the kind of cartel that controlled the price of oil, but their influence has been reduced by the increase in production in shale oil in the United States, and that's kind of set the market into a different area. Now, OPEC chose not to reduce their production in an effort to stabilise prices. That's punishing some of the weaker members of that group. As you remember us talking about in recent months, the likes of Venezuela and Iran need oil prices to be much higher to be able to balance their budgets. The prices at that the price that it's at now means that no OPEC member is actually balancing their budget because of this, but the more powerful members like Saudi Arabia are in fact using their reserves to try to keep their market share rather than cut production and perhaps lose that foothold in the market.
So is anyone actually benefiting, I suppose?
Well, in general, economic growth tends to be boosted by lower oil prices, but the most simple thing is that consumers actually benefit from lower oil prices. Of course, the price at the pump has come down. People are paying less for their petrol for their cars, but also companies like airlines and travel companies do tend to see benefits because of this, because, of course, fuel is a massive part of their bottom line. Now, the discussion in the motor industry in the US is that it's even, in fact, boosted sales of cars there that were up 6% last year. That's the discussion being had at the Detroit Motor Show this year, which gets underway this week, with many car makers finding their environmentally friendly models are being overshadowed by the traditional gas guzzlers. Here's Solange Moujan with more on that.
Gas guzzlers are back. 4x4s and pickups are the stars of this year's Detroit Auto Show. With the economic uptick and the fall of oil prices, many automakers are placing their bets on the American consumer's darlings, SUVs and trucks.
I don't think anyone could have imagined gasoline or fuel prices at $50 a barrel, right? I mean, it's hard to imagine. So in this environment, you have to be well prepared with a portfolio that can handle all scenarios.
The 50% fall in gas prices means there's been a shift away from mid-size and fuel-efficient cars in favor of bigger vehicles and trucks, a market trend that makes it less attractive for car companies to invest in green alternatives. But they're under increasing pressure to do so, in part because they have to. The Obama administration has issued tough targets for 2025, a paradox that has car makers touting the green line while pushing new models of the combustion engine.
Well, it's not about the muscle. When you look at these vehicles, they're a showcase for all the innovation and technology that we've been working on around EcoBoost performance, around lightweighting, around aerodynamics, around technology we have in the vehicle.
Fuel-efficient, eco-friendly cars may be an integral part of these car makers' showcases at the Detroit Auto Show. But for now, demand for them is falling alongside gasoline prices, pushing some automakers to turn back to their good old, more profitable bestsellers.
A quick look now at what's happening on the stock markets, and we've seen European shares opening down at the start of trading here today. The falling price of oil having an impact on oil and gas shares, as you might imagine. In London, the supermarket chain Morrison's has sacked its chief executive after the firm posted the worst Christmas results of its competitors. Its shares jumping 3.7% on that news. Investors obviously pleased that Dalton Phillips is on his way out. Over in Asia, the Nikkei back in business today after a public holiday on Monday. It's down 0.6%, though again the oil price hitting shares there. It also raised many of the earlier gains that we saw in the Shanghai markets, which is trading, as you can see, just above the flat line now. Let's move on with a look at some of the day's other business stories. And Toyota is ending its 3-year freeze on building new factories as the US auto market rebounds. The Japanese car maker looking to open 2 new plants in China and another in Mexico. Renewed expansion by Toyota will put pressure on its rivals General Motors and Volkswagen. And Amazon is to create 6,000 new jobs in Europe. The US online retailer says the expansion is down to booming demand for its services. The jobs will be in logistics centres, customer service and software development, among other areas. The biggest number of permanent jobs will be created in Germany and Britain.
Got a little bit of outrage for you on the programme now. We like a little bit of outrage now and again. This is a very serious bit of outrage. It's changes to an iconic chocolate product, causing some controversy in Britain.
Yes, this is the famous Cadbury's Creme Egg, which, if you're not familiar with it, is a small chocolate egg filled with a sort of a yellowish gooey stuff. I don't know how I can explain that. It's a favourite in many parts of the world. It's got a bit of a cult status, both in Britain and in Ireland. It emerged on Monday that Cadbury's, which is owned by the American company Kraft, has changed the chocolate used in the eggs. It's no longer the milk chocolate, the dairy milk chocolate that had been used before, but instead of what's being described as a standard cocoa mix chocolate. Cadbury spokesperson telling The Guardian the new chocolate had been tested on consumers and found to be the best one for the cream egg. People are outraged by this on social media, as you might imagine.
Been eating those for 30, 45 years.
Messing with the classic, revealing your age there, Stuart. I think this is, but they're very divisive. I'm not a fan. Florence Williamino, you spotted this story in The Guardian earlier.
Yeah, something I just don't understand about the Brits, I must admit.
It is very sickly. The thing is, you have to put them in your mouth and then crunch them so that they crack and it all oozes out.
I'm not engaging with that.
It's the best way. It's the best way. Stephen Carroll with Creme Egg news on France 24.